Government bonds are threatening to blow up the world. That's after
Yeah.
several James Bonds repeatedly saved the world. The next installment in the 007 franchise is said to be a ripper. What's going on with
Oh, yeah.
government bonds?
Battle of the Bonds.
Battle of the
Yeah,
bonds.
that'll be good.
Just wait till Bond's underwear gets involved, and then it's a three-way battle.
Yeah, it's a lot of talk about bonds at the moment. The US Treasuries, 30-year Treasuries, the yields tip past 5%, which is seen as like a critical threshold. They've eased back
What's
a bit
it? Maybe
last few
just
days.
can we start with what's a bond?
What's a bond? So the government wants to borrow money.
Right.
They issue bonds, and people pay them, give them money, and then the government pays them a return.
Right.
And so that's sort of the interest rate. And it's kind of like it's the yield, they call it yield, but it's like you think about it, the interest rate that they're paying on the bonds, that sets baseline interest rates throughout the economy. So what happens with bonds is important. One, it affects like the interest payments that governments have to make on their debt. But then two, it's sort of like a baseline interest rate. So it does affect interest rates throughout the economy.
Right.
Yeah. So with the 5-year Treasuries tipping past 5%, that raises some alarm bells because it's like, oh well, the US government is going to have to pay more on its debt, and we talked about that last week. They've got some big debt story happening, but it also means that interest rates will start rising for corporations and for everyone, and then that starts to have implications too.
Right.
So that's why we care. That's why we care.
Okay. And so what's the news? What's the scoop?
Well, it's interesting. So yields are up everywhere. So it's not just the US has gone past 5%, but Britain's at 5.5%, the highest since 98. Germany's at 3.1%, highest since the debt crisis in 2010. And Japanese bonds got to 3.2%, which is a new record for them. So yeah, it's kind of up everywhere. So that's a little alarming. And if it keeps going north, then that's gonna have some big implications. But there's kind of two things that are driving it. Like one is the risk of default. And so we talked about this a bit last week with, the US is paying more on interest payments than they're spending on defense each year at the moment. As yields go up, then they're going to have to pay more. And at some point people go like, well, that's getting risky. They need a return for that risk that they feel like they're taking, and so they'll charge more for they need a higher yield. They need a bigger return because I think that it's now looking like it's more risky. So that's part of the story. But it's also that we've got inflation lifting in some countries. So yeah, the UK saw a spike last week in inflation. But the big one, then, this is where Albert Edwards at Societe Generale, he's a bit of a perma bear.
Right.
He's always like talking doom and gloom, but
all right.
Yeah. So keep that in mind. But he reckons the Japanese bond market's going to blow up the world.
Oh.
Yeah, a little alarmist. But
a little alarmist to say it's going to blow up the world. Yeah, sure.
Yeah. But yeah, so inflation is lifting in Japan. And so inflation's been a non-story in Japan for close to 30 years. And then
they've always had deflation, haven't they? Or
yeah, they've been fighting deflation.
Or whatever the negative one is.
Yeah, deflation. It's been a non-issue in Japan, and they've been trying to fight off deflation for decades.
Yeah.
And they saw a post-COVID spike with the rest of the world, but that's then come off, but is now starting to lift again. So core inflation's now running at 3% and lifting quite sharply in the past 6 months. So Edwards is saying that's quite alarming. And the reason why is they've got to unwind their quantitative easing. So you remember during COVID where we had quantitative easing, governments just printing money.
Yeah.
And the central bank's balance sheets, which gives you a sense of how much money in the systems, they really lifted. So the Fed sort of got towards like 35-40% of GDP. So lifted from, back in the early 2000s, it was like 3 or 4%. But it got up to 35-40% through COVID. Japan has been running quantitative easing since 2010, and their central bank balance sheet's at 130% of GDP.
Well,
So, yeah, it's massive, massive.
I mean, I
So
don't
they've just
understand a lot of what you're saying, but I can tell the difference between those numbers.
that's right. So yeah,
That's
that's right.
significantly higher.
Yeah. So the central point, like Fed printed a lot of money. Everyone's like, whoa, Fed's printing heaps of
Yeah,
money. That's going to be huge.
yeah.
But Japan's did 5 times the amount that the Fed did.
Just hold my beer, hold my
Yeah.
sake.
That's right. Yeah. And
Right.
but, I mean, it's kind of why the central banks like the Fed and the ECB felt that they could, because they'd been watching Japan fight deflation for 15 years through money printing and
Yeah.
hadn't really seen any negative consequences.
Right.
But now Japan's got inflation, and Japanese inflation is now higher than the US and the euro area for the first time in 30 years.
Yeah.
So
Right. And is it trending up? Like, are they talking about it sort of peaking, or are they like, oh, this is? I've heard the term runaway inflation before. Is it running away, or have they got it sort of in check?
I don't. It's not runaway yet. It's kind of a good news story. They've got like inflation back in sort of a 2 to 3% band, but that's good. But it has lifted very sharply in the past couple of months, and it's now
Right.
broken through that 3% band. And if that trend continues, it's at 4% by the end of the year.
Mm.
That's problematic inflation. So it's a little bit like, ooh,
But they're
that's kind of
notoriously sort of an efficient country, aren't they? Generally, like you look at, like the Toyota factory and whatever, they invented things like agile and stuff. Like,
yeah.
like if you talk to them, like to the Japanese, to the BOJ, are they just saying we're just smashing it? We're doing a great job. Like we are exactly where we tried to get to.
Yeah, yeah. Well, at some extent, yeah, they might the Japanese government might be happy to have inflation run a little higher.
Yeah.
It's not really Japan's problem though. And this is what Albert Edwards is saying. It's the rest of the world's problem, because Japan printed a whole heap of money, which then
Yeah.
went into their system.
Yeah.
Their local super funds and whatever did two things. One, they bought US stocks, so they've been big buyers of US stocks, and two, they've been big buyers of US treasuries.
Right.
And so Edwards is saying, like, if they start trying to unwind their quantitative easing, and they've done no unwinding of quantitative easing, it's pretty close to peak. But like with inflation going through the top of the band, they're going to have to start unwinding quantitative easing.
Right.
So that means pulling money back in from the system, which then means pulling money out of the US stock market and out of US treasuries.
Right. And so,
And
depending on, do we have any concept or any estimation about how much went into the US stock market and US treasuries? Like, in terms of a percentage of like we've seen shares go gangbusters, right? Like shares are up through, the stocks are up, everything's looking good. The Magnificent Seven's been on a tear, everything's going well. Like, how much of that is due to Japanese kind of money printing? Do we have any sense?
I don't know, but I don't know. I don't know even know quite how you would quantify it. But like Albert Edwards definitely believes it's one of the key factors driving the bubble in US equities, which he sees a bubble there. But
Right.
he reckons a big part of it comes down to Japanese buying. I don't know what numbers that's based on, but yeah, I can't tell you. It's a good question, but maybe I'll.
Thanks. I think we've all learned, Thomas, that by this stage in the podcast, if I've come up with a good question, then that's probably as much as we can hope for.
Yeah. All right. Next topic. Yeah. But it's he's saying it's a potentially a scary story, because they're going to start pulling money out of US equities at the same time as everyone is kind of pivoting away from the US stock market.
Right.
And when they stop buying US treasuries, that means the US government has to offer more return to entice buyers to buy treasuries, which means higher yields.
Yeah.
Which then creates higher interest rates, which then creates reduced margins in US corporates, which reduces earnings, which then also has a negative implication for stock prices.
Right.
So it's all stock price negative is sort of what Edwards is saying.
Yeah. And what are you saying? Without an Australian financial services license.
Yeah, buy Bitcoin.
No, but I mean, is this
No.
guy just an alarmist kind of,
I think
kook, or
Edwards
is
is
he?
always interesting. No, he's good, and I think he's interesting because it's the worst case scenario.
Yeah,
And he's saying like people aren't paying enough attention to what's happening in Japan. Everyone's
right.
looking at treasuries and thinking that what's happening with treasuries is a debt story. It's a Trump uncertainty story. It's cutting the tax base, all of that sort of stuff, and the risks around the US outlook. But he's saying like even if none of that was happening, the simple fact that Japan is going to stop buying US treasuries because they're sucking money back into the central bank, that's going to drive yields higher.
Right.
So yeah, I mean that is true. How big it is, we don't know. But it's interesting because I think that is the worst case scenario. And his view is that if we have a crash in 6 months' time, we're going to look back and be like, "Yep, it was the Japanese government ending
This is
quantitative
like that
easing that triggered it."
Michael dude who called the subprime
the
thing,
big
right?
short.
The Big Short. Yeah.
Yeah,
Right.
sort of. Yeah. It could be fine. It could just be it's a risk.
Yeah.
But yeah, it'll be interesting to see how it's managed.
Right.
Yeah, but like Japanese inflation is now one of the most interesting stories in the world right now. After being a nothing burger for 30 years.
Yeah. I did not have Japan being the next Bond villain on my bingo card. That's 007 versus Godzilla.